Good evening, everybody. So in this video, we're going to be finishing the past paper of question number 2. In the previous videos, we covered question number 1, where we learned the income statement, statement of financial position, and some accounting concepts. But in this video, we're going to be finishing question number 2 of 9706/21, May-June 2025. So let's get started. Ben and George converted their partnership into a limited company, M Limited. A. Explain 2 benefits of trading as a limited company rather than a partnership. A limited company is basically a company where we have the owners as shareholders. So we don't actually have 2 owners who look after the business. It's just basically the shareholders are the owners. So the advantages of this is that basically we have limited liability. So unlike partnership, in partnership businesses, when the owners are in debt, they will just sell their personal assets to cover the debt. But in shareholders, there's no personal assets. So to cover the debt, the owners will not lose actual money. They will just have to sell the limited liability. So here in the answer for 1, we'll just put benefit of limited liability with a little explanation to get that extra 1 mark. And for the second point, we can say that since a limited company is owned by shareholders, what do shareholders do? They contribute capital in the form of issued shares. Now, since we have many shareholders, the issued shares will be more. Therefore, the capital contributed will be much more than a partnership, because a partnership business just has 2 or more owners, which is not a lot. So there'll be more capital contributed. Next part, we have the following information was extracted from the books of M Limited at 31st of December 2024. Share capital, this amount. Share premium, this amount. Retained earnings, general reserve, debenture, bank loan, and tax charge. On 31st of March 2024, the directors had paid an interim dividend of $0.05 per share on all ordinary shares held at this date. So first of all, what's interim dividend? Interim dividend is the amount of dividend, is basically the amount that is paid to shareholders after profit is generated. So it's basically the profit of shareholders at the beginning of the financial year. That's what interim means. And then on 30th of June 2024, the directors had issued 200,000 ordinary shares at premium of $0.04 per share. Okay, so basically ordinary shares, we all know what that means, but premium, this is going to be the additional amount on top of the normal ordinary shares amount. So maybe if we want to find the total ordinary shares, we're going to have to take the ordinary shares given here as share capital, this amount, then we're going to have to plus it with the premium, which is the additional amount. Okay, then we have on the 1st of October 2024, the bank loan was taken out by M Limited. Then it says for the year ended 31st of December 2024, the profit for the year was $285,000. Part B, calculate the amount received from the issued shares on 30th of June 2024. So, like we said, it's very simple. To find the total ordinary shares, we're going to take this one. We're going to take 0.40 plus was $2, then multiply it by the shares, which is this one. Put in the calculator, what do we get? Okay, so we take $2 plus 0.4. Then we times it by 200,000. That way we get the right answer. We get that one, yeah. Okay, so that's for part B. For part C, calculate the total interim dividend paid on 31st of March 2024. Interim dividend is going to be which amount? This amount. So how we do it, to find the interim dividend, first of all, we're gonna take this amount, divide by okay, this is what we're gonna do. We take 106. Just a minute, I'm checking something. Okay, so let me try to explain it the best I can. So we take this amount, 1,600,000, is the total ordinary shares, the total price of ordinary shares included when we take the ordinary shares price times the total ordinary shares. We get this one. So to find the number of ordinary shares, we take 1,600,000 divide by $2 each. We get 800,000. Now to find the total ordinary shares, interim dividend, sorry, we're going to take 800,000 minus the issued shares at 30th of June to find the amount at the beginning. 600,000. Now this amount is the one that we're going to times by 0.05, which is the price per interim dividend. 30,000, check here. Yeah, this amount, 30,000. Next part, question number 2D. So this part is a little bit more tricky, but calculate the profit from operations for the year ended 31st of December 2024. So this is how we're going to do it. Interest and tax. So we're given profit for the year. This is the amount that we have before interest and tax. So to find the profit after interest and tax, we take this profit plus interest and tax and debenture. Okay, so this is what we're going to do. First, we take 885,000 multiplied plus by interest at the end of the year, 22,000 plus with bank loan. But bank loan is a little bit complicated. So to find bank loan, as we know, this account is prepared at the end of the year, 31st of December. So the 31st of December is going to be, let's calculate the months first. So this one is on October. So October, November, and December. That's 3 months. To find the bank loan, divide by 12, multiplied by 50,000, multiplied by 0.1. This amount. Then plus this bank loan interest, plus the taxation at the end, plus with profit of the year. Okay. Cost check. There's an amount missing. Okay, I forgot to put debentures. Because debenture, remember, it's some kind of I don't know how to say. When the business, us as a company, we pay profit to shareholders, we're losing. So we have to plus with debenture. Debenture, we just take this one, 120,000, multiplied by 8%. So we copy this one. Then we take 120,000 multiplied by 8%. 8%. Then we plus this one. That's it. We get the amount we get is going to be this one. This is correct. The next part, we have to open the retained earnings account. Now, before we do this part, we have to understand what is retained earnings. Retained earnings is the earnings that has been retained from profit at the end of the year. So how we're going to calculate, we'll take the balance at the beginning of the year of retained earnings minus the bank, that is basically minus the dividends, to find basically minus the money that's going out to shareholders. Then we plus with the money that comes in. So it's very simple. We take, let's go to the beginning. At the beginning of the year, we're given general retained earnings, this amount, just at the close. So we actually have a formula for this one. It's going to be retained earnings amount is this one. Opening retained earnings plus profit minus dividend, transfer to reserve, then we get closing. So as you can see here, what we do is we take 885, which is the profit, then we minus with dividend. Then again we minus transfer. Transfer, where did we get transfer? Transfer. Okay, so our transfer is going to be the amount of general reserve. Okay. Yeah, anyway, so after we take profit minus dividend minus transfer, we get closed retained earnings. So now, in maths, you would have probably known that we put here x plus 285 minus this one minus this one. Then after that, to solve for x, we'll just find the sum of these ones. We get 205,000. Then x will be equal to 38,000. Now that will be the opening balance. We can prove it here. Okay, so now we can just go back. So this is what we'll do. On this side, on the credit side, we will put the balance brought down. We'll balance brought down here. The amount, which is 38,000, you put it here. On this side, we put profit, bank, then we put interim dividend. Interim dividend, we have this amount, which we solved in the previous question. We'll put it somewhere here. Just like this, the way they did here. Balance brought down, this one. Then you put interim dividend, this one here. General reserve. Now, general reserve is the amount that is taken out of profit. It's taken out of profit and sent back into the business as capital for the following year. So it is going to be, it's going to less the retained earnings. And after that, the balance closed down is going to be this amount, retained earnings at close. Now when you find the difference, okay, it's like this. 243,000 plus plus with 50,000 plus with 30,000, we get 323. Then only subtract it with 38,000. We get 285,000. Now that amount, we're going to transfer it to statement of profit and loss, which is basically going to balance out the debit side and the credit side, because always the debit side and the credit side must balance. Hopefully you understood that. Okay, thanks for watching, guys. Stay tuned for the next video. We'll cover question number 3. Thanks for watching.